Welcome back, everyone. In today's video, we're talking about Microsoft's Q3 2024 financial results. But before we get into that, Shamal says to like and subscribe. So, after hours, Microsoft is up 4.3% at $416 per share. The results must be good, right? Let's take a look. So yeah, Microsoft in unique position to scale generative AI revenue, Goldman Sachs says, ahead of Q3 earnings. So, what was expected? What was expected was earnings per share of $2.83 and revenue of $60.769 billion. 69? According to data derived from Benzinga. What was expected also was Azure to post a 28% growth. So, what do we have? What do we have for Microsoft? The softy. So yeah, first off, revenue was $61.9 billion and increased 17%. That compares to expected so a beat on revenue. Earnings per share was $2.09. Earnings per share increased 20%. Microsoft is a growth company again, thanks to Satya Nadella. So yeah, that came in at $2.94 compared to expected $2, a beat. So top line beat, bottom line beat. Okay, well, what do we have? Microsoft Copilot and Copilot Stack are orchestrating a new era of AI transformation, driving better business outcomes across every role and industry, said Satya Nadella, Chairman and Chief Executive Officer of Microsoft. This quarter, Microsoft Cloud revenue was $35.1 billion, up 23% year over year, driven by strong execution by our sales team and partners, said Amy Hood, Executive Vice President and Chief Financial Officer of Microsoft. So these are fantastic results. Let's dig into it and figure out exactly what's going on. Let's see, productivity and business processes was $19.6 billion, increased 12%. Office was up 13%. Office for cloud services up 4%. LinkedIn's up 10%. Dynamics is huge. For such an aged project, Dynamics has been around forever. And that's up 19%. That's a massive increase in Dynamics. Dynamics 365 is up 23%. That's the online version. That's massive. That is massive. Dynamics is Microsoft CRM. It competes with Salesforce. Let's see, Intelligent Cloud's $26.7 billion and increased 21%. Server and cloud-based services increased 24%. Azure increased 31%. Let me highlight that. That is massive. 31% for Azure. What was expected was 28%. So Azure is just kicking ass. I mean, Azure is just a monster. Holy cow. This is likely to be AWS. Amazon will announce the results soon, and this 31% by Azure is likely going to beat AWS's growth, and Microsoft, I think, can eventually beat AWS. Azure's a strong number 2 right now, but I think eventually they will probably beat AWS if they can keep up these results, because these are huge numbers. Let's see, more personal computing, $50.6 billion, increased 17%. Windows increased 11%. Devices decreased 17%. Xbox was up 62%. This is due to the Activision acquisition. Yeah, the Activision acquisition. Say that 5 times fast. Search was up 12%. These numbers are just massive all around. Holy cow. $8.4 billion in buybacks, repurchases, and dividends. Wow. So yeah, let's dig into it some more. Let's see, earnings call. We'll get to the earnings call later. Well, this will probably be released before the earnings call. Let's see, blah, 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 blah. Okay, so what do we have? We went through these numbers just now. These numbers are all fantastic. Let's get to the segment results. Here's the segment results. Okay, Microsoft Cloud's up 23%. Office commercial products up 12%. 365. Office 365 is up 15%. Office consumers up 4%. LinkedIn's I can't read sideways. 9%. They put this too far apart. I wish they sort of shrunk this a little bit. I have to look all the way across. Let's see. Dynamics is up 17%. Dynamics 365 is 22%. Server product and cloud services 24%. Azure 31%. We discussed that. Windows is up 11%. So it's interesting to see. It's interesting to see Windows rise again, because PCs were down last year. So it's good to see that up. Windows OEM's 11%. Windows commercial is 12%. Devices down 16%. Blah blah. We discussed the rest of those numbers. Okay, what else do we have? Forward-looking statements. Okay, that's fine. Okay, so yeah, revenue of 155 for the 9 months ending, 3 months ending, $52 billion. Cost of revenue, gross margin, $36 billion. Oh, 2024 is what we want. $43 billion. See, sales and marketing is looking good. This is all good. Operating income is $27 billion from $22.3 billion. This is our fantastic results. Net income is $21.9 billion. Anything bad to say? Let me see. Short-term, let's see. Cash of $19 billion. A lot of this is due to the Activision acquisition. Short-term investment, $60 billion. How much debt do we have? Where's the debt? Where's the balance sheet? Balance sheets. Okay, short-term debt's basically nothing. Long-term debt is $42 billion. Now, the reason Microsoft has long-term debt is because they separate their income into regions. For example, a lot of their money is actually offshore in Europe, and they keep that money there. They don't bring that into America, but most of their expenses are in the United States. And the reason they don't bring money into America is because they don't want to pay the taxes on that. So they have all this money shored up over there for tax reasons. So that's why they take out this debt. They don't have to take out the debt. They have far more. They have more than enough money to pay it off. That's the reason Microsoft has that debt. A lot of companies do that. These bigger companies tend to do that. They sort of regionalize their money, and they don't want to get the taxes. So yeah, actually looking at more at Azure in Q3 2023, it grew 27%. In Q4, it grew 26%. Q1, it grew 29%. In Q2, it grew 30%. And then in Q3, this last quarter, it grew 31%. Growth in Azure is accelerating. Okay, and the main reason for this is artificial intelligence. Microsoft jumped onto AI faster than any other big tech firm. They jumped onto it faster than AWS, well, Google's always been into AI, but I'm talking more about generative AI, something that they could install into their servers and sell to other companies, that they could plug into Azure. They're buying tons of H100 chips from NVIDIA, and they're buying tons of my 300X chips from AMD, installing them into servers, and then selling that compute to end users. They're also using this to power Office 365. You'll notice that this browser here has Edge Copilot. So you can do image generation, text generation, all sorts of things. So yeah, these results are awesome. And honestly, I give this report an A. I give it an A. I can't think of the only downside is devices. Devices is down because they are focusing more on premium service devices as opposed to the lower models, and that's why devices is down. But this is the only real negative right here is the devices, which is down 17%. But yeah, I give the report an A, and just as an aside, back in December, I created a DCF on Microsoft, and I gave Microsoft then an implied share price of $438.36. This was basically a 12-month target. And as you can see here, Microsoft's currently at $418.62. So they're on their way. They're almost there, actually, to my target from over 4 months ago, like 5 months ago. But yeah, if you want to see my my decent valuation model on Microsoft, how I came up with this number, and I'm going to be updating this shortly also. But you can also see my conservative case and my optimistic case at my Patreon. There is a 7-day free trial on my Patreon, so you can view all my investment reports, my corporate analyses. I have Microsoft, I have Tesla, I have PayPal, I have tons of companies. I have like 10 or 12 different companies that I've done an analysis on. Check it out. You get 7 days for free. If you don't like it, just cancel, and you get that. You can get the investment reports and the DCF valuations for free anyway. So yeah, don't forget to like and subscribe. Thank you for watching, and I will see you in the next one.